What's happening, family? So in today's recap video, um, I will go over the Australian dollar, Canadian dollar session that I took last week, and it ended today. So let me pull up my screenshots in front of me. So basically, these are all the screenshots that I have collected in regard with all the positions that I took for my journal, of course, right? So let's start at the beginning, right? So last week, Thursday, I first suffered from a loss. It's very little here, but let me just quickly go over those also. So, right. This was basically my setup from the 15-minute time frame, right? To look for buys at this point. Now, I noticed our inducement and our unmitigated POI. Here to the left side, it already mitigated something of a order flow, I believe it was. So this was basically the only inefficient area where price, in my opinion, may come into, right, to create efficiency. And as we can see here, liquidity was just being swept. So at that point, I went to the 3-minute time frame and first noticed that this low, right, like this candle that took out the liquidity, here it created a low, and then it basically came up but stayed within the high or below. Perhaps I can point it out like that, right? So it stayed below the candle that practically took out the inducement from the 15-minute time frame here, right? So after I noticed this week, I thought, you know what? Now price did close at this point above that candle, right? But it did kind of a sweep of this high here, right? Which can basically act as our inducement, right? However, after I saw this setup forming, I thought, you know what? I am going to take a position from this area because I thought, you know what? Price may do something like this, and then, you know, it will continue higher, perhaps, you know, and that was basically my view or approach for this scenario. Unfortunately, that did not happen. I mean, it is what it is. Sometimes we miss out positions, sometimes we lose, and hopefully, more often than not, we win, right? But if you lose 1, 2, 3 positions, it should not affect you because, you know, you live to fight another day, right? So at this point, so basically, like I said, I practically placed my buy order from this wick, right? Because I had my private coachings, one-on-one sessions, and I did not have the time to, you know, monitor price action live. So basically, I placed a risk order via a buy limit and just left it for what it was. And, you know, sometimes later, let me go. Yeah, I got an alert that my position was triggered. And at this point, you know, I was pretty confident that price indeed will go higher at this point, because now I saw, okay, this internal pullback, right? Internal low was now being liquidated, right? So we practically had our impulsive move, corrective move, and impulsive move, which of course gave us our bullish lightning bolt, right? And then this area being our bullish internal inducement. And also this candle as a whole was now also being mitigated, right? So I thought, well, not bad. Let's see how it turns out now that we are triggered into that position. But unfortunately, I took a loss, right? It is what it is. Doesn't matter, because on the long term, just following my system and these concepts will give me profitable and, consistent results. So, took a loss. And while later I noticed that, this was a pretty impulsive move. And I checked, one of my community members told me that around this area, news came out. So I personally didn't anticipate that, because I did not look at potential news. Took my loss, and then let price action just run for the coming period, right? So at this point, right, the next day, because if we look, this was Thursday, New York session, right? So in about 4.5 hours, market was about to close. So let me minimize these groups here. Right, and then the next day, I looked at the price action again from the 15-minute time frame perspective. And now I noticed, well, we have major bearish inducement here, right? Because now we have our bearish lightning bolt, so to say. Yeah, and obviously I no longer paid attention to this, with this perspective, right? But I rather looked at it like this, right? So price closed here below this one. So my BOS got now confirmed, right, to the downside. And I could see, well, the whole week, last week, that is, we were pretty bearish, right? I believe this is Friday, Thursday, Wednesday, Tuesday, Monday, right? So since Monday after New York session opened here, not long after that, right? Price kind of rolled over, and then the pro trend changed into somewhat a bearish bias, right? So that's why I anticipated Friday. You know what? Let me mark this one out as my inducement. And then I have set my alert at that point. And I also went to the lower time frame and noticed that here, indeed, price is almost at the 15-minute time frame inducement, right? While looking at that area, I noticed this bed of liquidity, right? All equal highs. So to me, it was just a matter of patience at this point. Wait until price at least takes out this inducement. And I believe not long after that, 11:37, 11:47. So about 10 minutes later, right? So inducement got taken out. And at this point, I got interested into looking short positions, right? So now, obviously, this black candle did kind of, engulfed this gray candle that eventually took out inducement here, right? But, to me, this would be a very, very aggressive way to enter, even though I got a liquidity sweep on the 50-minute time frame, right? But I started also to notice a entry type when I viewed the chart from the 3 minute, right? And that will be something like this. So we had those equal highs. Those were also liquidated. Now inducement was liquidated. So preferably what I would like to see is now something like this to happen, right? And then price takes out this most recent 3 minute structure low, this one, right? Internal structure. And preferably also price closes below it. While doing so, at least one candle that has liquidity sitting above it, right? So I would then look for something like this, and perhaps even the mitigation of this candle, and then look for a potential sell at that area, right? That is the most conservative approach. Again, if you are a bit aggressive, you can definitely enter like that, but yeah, like the name suggests, it's a risky entry, right? So for me, I would like to see a bit more confirmation, right? So I waited, and now look, it was this low here, right, that I previously pointed out. So let me mark it out once again, because don't get confused with the dotted line here, right? Because this one is practically the replacement of this low here, right? After I noticed it failed to take that low out, right? So basically price now took out inducement and it made a higher low, right? And then eventually again continued higher. So now my entry type 2 is even more confirmed, because now we definitely had a close above, you know, those equal highs, liquidity being swept. And this one did created a higher low, right? Instead of breaking down here. And also in this whole movement down, there was no whatsoever liquidity created, not structure-wise, let alone candle-wise, right? So that's why it's wise to let price action do its thing, right? Until we get a valid confirmation signal, entry criteria, however you want to call it, right? So at this point, I did notice some couple interesting things. Again, while the price action took out all these equal highs, it did close above, took out inducement, right? It came down, it retraced, but not enough to break or take this low. Instead, it gave something of a new inducement, structure-wise here. But also, look at this. I have marked here a very little tiny red dot. Now, why did I mark that one here? Because look at this, what happens. The gray candle took out the low of the black candle, the previous candle, right? So to me, this is now a valid pullback, right? If this is a structure-wise pullback, this is a candle-wise pullback. So with other words, what we are seeing now is practically something like this, right? So candle-wise pullback, structure-wise pullback, right? So basically, I am now looking how price will react to those areas. Now, let's go to the next screenshot. Yeah, so practically, you know, I drew out my trade idea, right? Where I would look for a possible entry here. Because now, like I said, if, you know, this low gets taken out, while price action comes down and gives us also our first internal bearish inducement here, then instead of looking for buys at this point or this point, I would rather look for sells, right? Because my entry type 2 is kind of given here, or better said, in the making, right? So I can, participate in shorts from this point, right? So this was basically what I would like to see. And now I noticed also, because before, look, it was, pretty impulsive. Well, not very impulsive. It kind of died out at some point, because if you look at this move, right, it was pretty impulsive, and then it slowed down, it slowed down, it slowed down, and eventually it kind of died out, right? If that makes sense. So now I noticed this gravestone doji and this black candle, right? So now we have some kind of pinnacle point of our entry type 2 model, right? So that will be, again, close above all these liquidities here, right? Taken out inducement. And then price came, took out the candle that liquidated our higher time frame inducement, right? Because now it failed to make a new low, so to say. It made a higher low and then continued higher, eventually closing here above this candle, right? And while doing so, it gave us our valid candle pullback there. So that's why the red dot, right? But my initial attention would be still this one. But it depends, of course, how price gets there, if it creates before or perhaps even after inducement, right? So it all depends. That's why, let me go, one screenshot. Yeah, so with just 2 seconds, because if I go back, after I noticed, right, that kind of price decelerated here, ending up being a gravestone doji, and now perhaps this black candle was, the first candle after a long time, right, that could indicate that, yes, this could be the pinnacle point of my entry or entry model. So what I did was, in anticipation, a bit risky, yes, I know. So I don't advise you to go with these aggressive and risky entries in the beginning if you don't know what I'm trying to show you, because you will get stopped out. It will take some time and experience, to have put these into practice. And as always, patience is the name of the game, right? Because you don't enter blindly. There should be always a good reason. That's why those candle formations and also the individual candles basically tells us a story, right? So you have to be patient. And after I noticed that this black candle was about to close even below this one at this point, then I got interested in taking a risk calculated position here. Now, why again not here? Because now only inducement got taken out. There was no liquidity created to be taken out in this retracement, right? And this was actually the low that I was looking for. But now at this point, we have so much more confluence, right? And now at this point, I have or am looking practically, for a potential short entry type like that, right? So I am trying to catch it at its pinnacle point here, and then later on, perhaps even here, right? If I get a scale in opportunity like that. So at this point, let's continue. Right, so price did indeed, came back and mitigated my entry area, which basically is a PY based on these candles here, right? And then price triggered, and my first position was in play, right? So at this point, again, I am still looking for price to push lower and perhaps even manipulate buyers at this point, because imagine how many, traders saw these all as break of structure, and now where is their order block where they will look for a continuation? Here, right? So basically this was looking more as a smart money trap to me, because I got my entry type signals here, and here. All I was waiting for now was just an additional confirmation like this, right? To make a scale in here, or even a more conservative way of entry here, right? Because again, this one is a bit aggressive, a bit risky, also calculated, because still price may at this point continue higher, take me out and then continue lower. We don't know, right? But again, to me, following my concepts system, everything, reading the candles, putting everything together, I can say, well, since this all happens at an extreme area after liquidity from a higher time frame is taken out, I can now look on the lower time frame for my structure-wise entry criteria, or even candle-wise entry criteria, right? So at this point, let's move on. Right, so at now, price did come back to even mitigate this doji, right? Gravestone doji. So if I had placed my limit order at that level, I would have gotten just a slightly better risk reward, right? I mean, reward. But, just to be safe than sorry, I put my entry, below this one. And then stop obviously there, right? So at this point, when price came back, I noticed, okay, it was to mitigate this candle here, not to continue, right? Because it should not have any reason to do so, because there is still liquidity sitting here. And there is still, of course, our structure-wise liquidity, this being the candle-wise one, this being the structure-wise one, right? So at this point, I placed basically a identical order to my first position, right? Being a 2 for 2, as I like to call them. But while the first one was a limit order, meaning if price comes back to mitigate this area, it will be triggered, right? My position will be triggered. And at this point with a stop order, meaning if price continues higher, my second position will not be triggered, only if price continues down, right? So eventually it did that, right? So it came down and it did trigger my second position. Now look, at this point, I just marked out what I had in mind, what I saw earlier, right? So, like I said, now price came to mitigate this area, and it gives a reaction from that area, right? Now, why does it do that? Because, again, it manipulates buyers at this area, right? Because everyone is, again, looking for buys, because they see this as BOS, this as a BOS, right? And then at this point, a continuation like that. However, now that my entry type 2 is basically given, right? Because now I identified this also as my endorsement. So I thought, well, if price should continue higher, it will do so to take out endorsement and to manipulate more buyers from this area. But I knew, okay, if I enter here, I can expect at least, that price will take out everyone who entered here at their stop loss, right? So basically, if we go to the next slide, well, here price kind of slowed down, right? The bearish retracement, so to say. And then continuation. So at this point, I thought, well, if price does not reach this blue dot here, which was first my internal inducement, right? Like I mentioned, something like this, right? However, if price tops out here where it is and it will continue down, it will stop buyers here, and then this will be my new inducement. So if price comes back and gives a reaction again, just like what I saw here after this major inducement is taken out, but now from the lower time frame, I will look for any candle-wise entries should that happen after this internal bearish inducement is taken out. Of course, this one has to be created first, or I mean, this one has to be validated, and that happens only if price takes out this low here, right? Sorry, this low, not this low, but this one. Like, it has to take out this one, because then this would be our next lightning bolt, right? Bearish. Okay, so at this point, everything was set and planned and, you know, alert, everything. So let's have a look. Well, price did now at this point, you know, is about to close even below this candle, and eventually it did, right? So that's why now I have placed my third position. Remember, 1, 2, third, and this one obviously via a limit order from, as you can guess, here, that internal inducement, which moved from here to here, right? Because that one broke now this low, and this was the most recent pullback, right? So far, entry type 2 was practically playing out perfectly, right? So now it's basically waiting until price comes here, takes out the inducement, and will trigger my third position, right? So let's see. Okay, and at this point, I noticed, well, what I would like to see did not happen. So again, my inducement, which was here before, now moved to here, right? So yeah, and oh, not too fast. At this point even, right, I again noticed something interesting here. So now again, our inducement moved from here to here, right? So while this was now our inducement, I thought, well, this could be perhaps the POI that is sitting above it, right? So if price at this point again should come back, either after inducement is taken out, or and perhaps even mitigating that POI before making a entry here, right? Instead of waiting until price comes to mitigate this unmitigated entry, which happens to be also, I believe, well, no, not just yet, but very minor order flow, I would like to call it, but it is not. But however, why does, again, price gives as a reaction here? Now, look at this, right? Right? So again, if this last bearish push to the downside could act as a order flow or refined order flow, right? Price now comes here, and now it basically does the same as it did here earlier, right? So it tries to manipulate buyers But we know there is now candle-wise liquidity sitting here. And just coincidentally, our, IFC candle here, because this gray candle took out all the previous liquidity here before this black candle closing below here, right? So that's why my attention was going out to this IFC candle. So so basically what I did was I placed a fourth position and left my third position for where it stands. Right, so I did not cancel it because, imagine that price still, does something like this, takes out inducement, right? Mitigates this candle here, which then triggers my position, gives a reaction. It may come higher to take out the high of that IFC candle, and then it may continue lower, right? Because now, structure-wise, this is actually our, well, not deep pullback, but you know what I mean, right? It is, practically, this was a minor pullback, this was a deep pullback, and this was, even a candle-wise pullback, right? One candle, 3 candles, a lot more candles. So my attention and focus will lie on this one. And not, immediately a risk limit order from this inducement with a stop all the way there. No, that's why I chose this candle as my risk limit order. Why? Because if, price comes here and takes out this candle-wise liquidity, and it will give me a reaction, just like earlier here. If it would do the same like that, I will then look for here a risk limit order, right? Because by then inducement is taken out and price is also giving me structure-wise a change of character and my bearish inducement at this point. So then I would definitely look for a risk limit order here and then, put my stop just above somewhere there, right? But price action has to give me the proper setup. Otherwise, I will not consider that, right? So let's see. Now price took out the internal inducement, as in candle-wise pullback inducement, right? At this point, this blue dotted line. And after that, look, I was looking at price action and I thought, well, that's a bummer. I came very, very close, like that, right? But it did actually exactly what I had anticipated, right? So it took out the inducement and then it waned down and then took out, and well, I believe it did eventually close, but we will see that in the next screenshot, right? However, at this point, I had a last look at 14.29 at the price action. So again, because I was, having my private coachings and sessions, one-on-ones, I was not able to monitor price action live, right, constantly. So at this point, 14.22, I saw, well, price is almost here. I did set an alert, but I also did set an alert here at the bottom, just in case that price does not trigger me at this point like that, but if price perhaps does something like this, right? Create new inducement, and then I can either look for an entry here, or if this now has become our major inducement from the 3-minute time frame, because if this is our internal inducement like this, candle-wise, right, it got liquidated, then this could act as our, higher probability inducement, if that makes sense. And now that this one is created, this IFC candle could definitely be more of a confluence to look for an entry there, right? So I was practically waiting for one of two scenarios happen, either tap in, continuation, or like I said, something like this, and then this being major inducement, internal inducement, here, reaction, price takes out, taps in, POI, and then, right, continue down. So one of two scenarios I would like to see. However, 1422 and this time 1421, I looked and saw, well, I missed my opportunity, right? However, somehow, by some miracle, right? Look, boom. I mean, if that is not precision, I don't know what it is. It was definitely not calculated or whatever by me, but I did found it very interesting because I missed this entire move to the downside, right? Because the last candle I saw was practically this one here, right? Let's have a look. 1, 2. Yeah, the second black candle. So 1, 2. Yeah, this one, right? So within, what was the previous one? 29, right? And this one, 53. So within a matter of like 24 minutes, I got an alert on my phone while in my session with a student of mine that practically my fourth position did got triggered. So I went immediately to the chart and I noticed this, right? So this one did got liquidated. The first attempt did miss that IFC candle, right? But like I said, eventually this became our major inducement, right? Because this move took out internal inducement like this, right? So that's why I think price came all the way back here to take out inducement and mitigate this IFC candle, right? So somehow I did got triggered, and price was looking again to push lower, but look at the time, 14:53, and sometime later, 15:50, so like an hour later, I noticed that the price was still within this candle high and this candle low. So I was not interested in looking into any of these structures. Candle-wise, candles, right? Because it was basically all a inside bar of this high and this low. That's why I marked this arrow, pointing to the inside here, and this arrow pointing to the inside, right? As in, stay out of any price action that happens within these high and lows, right? And let's have a look. Yeah, sometime later, 16 hours. So again, an hour and 10 minutes later, I noticed there is still no, taking out or breaking below or above this gray candle here. Practically everything still inside bar, right? And sometime later, just before market was about to close, I had a look, and actually at this point, the market was closed, right? Friday, April 8th, and 11 hours, as in 11 p.m., right? New York session did close here. It was 10 p.m., by the way. And then this was the dead zone, right? And 1 hour after price, corrects itself here and there, as can be seen with these wicks. But I chose not to close my positions, right? So at this point, I hold my positions not overnight, but during the weekend. Usually not something I am doing, very quickly. But in this case, I was confident enough because I had practically my entry here via entry type 2 model. And then I practically followed price action every time, try to scale in after either a liquidity sweep or a mitigation to create efficiency, right? And now price closed. So I waited, and this morning at 8:30, just before I started my private coaching at 9 a.m., I noticed that during the Asian session, price, was again forming some nice price action, right? So what I noticed before the London session open was practically here now our bearish endorsement, right? So I have again set an alert at this point and was basically waiting. When I looked later at 1100 hours, right, I noticed, well, price is just crawling to that endorsement area, but it was not quite there yet. So I was just being patient, and if price, I also set an alert here, by the way. So if price somehow should continue lower, create endorsement, and then I will look for this area to enter from, because then this would be our order flow, right? If price then comes back after liquidating this, it may even, mitigate this last bullish push to the upside, being our order flow, right? And yeah, I was just looking for, again, different scenarios, either from this area and from this area, right? Excuse me. So a bit later, I did got an alert notification that indeed the endorsement I had marked out here was now liquidated, all right? So at this point, what I did is I followed price action live for a few minutes, right? My student was also, because we were having our sessions, right? And at this point, I noticed, okay, this candle may end up like a wick rejecting that area after endorsement is taken out, right? But like I mentioned in many videos, technically this here is, yes, indeed a mitigation of this POI. But from my experience, more often than not, if a wick within this POI, so to say, ends up being a wick, meaning price closes below, then more often than not, price will give a reaction, come back, take out this high, eventually close within the POI, right? And if price then starts to go down like this, I will then wait until the price close below, let's say, the candle that closed within our POI. Then I will utilize this candle as my entry, right? Because this is what I like to call the soul strategy, right? And if you don't know what I'm referring to, you can watch some of the videos I did a while back in the beginning. So Sol strategy is basically after liquidation and mitigation, you know, how you can differentiate by entering aggressively here, or a more conservative way by waiting until the wick or candle, you know, that practically, you know, quote unquote, mitigated this area, but closed below it. You can then wait until that high is taken out. And if you then get, you know, like I said, let's say if this is the candle, by the way, sorry, let's say, because the price closed here, right? Let's say that this is the candle, eventually the next one that took out this high and closed within the POI. And then, of course, the next candle opens something like this, perhaps pushes a bit down. And then the next candle opens here, it pushes again down. Now, if this candle that actually closed within the POI while taking out the candle that quote unquote mitigated this POI here, if price closes here, then you can definitely utilize this candle for your entry, right? So usually I will do definitely a more conservative approach like that. But, you know, as I mentioned, I did not have the time to constantly monitor, you know, live price action. So what I did was I placed my calculated risk limit order as soon as I saw that price was about to close, right? Like somewhere here. So I based my entry on the wick and put my stop there. Now, I say a calculated position because to me, this is a 50-50 probability. Why? Because we already have our entry type at this point, right? This being our POI, this being our liquidity. Now, both liquidity is taken out and POI, you know, again, technically, quote unquote, mitigated. So I can expect either to eventually get stopped out here, or that price will mitigate that wick and then continue down, right? Because at the end of the day, it's all probability. So that's why I went with a calculated risk order here and got triggered. And boom, I got stopped out. Now, I do apologize because as I looked later on here, right, I noticed that this could be a possible re-entry area for my position, right? Because my stop was just above this candle, right? And as you can see, I clearly got stopped out here. But when I looked at it at this time, you know, I did not have the time practically to mark that area that is gray, red, and then leave my position there, put a new, you know, sell position within trading view, measure it here, and then double click on it, copy paste all those data from my stop loss, from my entry, and from my TP into my broker platform, right? So it would be too much time consuming. And that's why I practically within TradingView moved my tool position immediately to this IFC candle now, right? That's why you don't see my loss here, but it's definitely there. I did suffer 1 hour loss, but I will, you know, definitely mark that later up when price action hits our take profit, right? So at this point, I basically placed another position based on this candle. Now, why? Because again, like before, this candle, I mean, this candle took out this candle, while this candle took out this candle. Remember, the first one did not close within, right? The candle here that took out this candle did close within, all right? As I mentioned earlier, textbook Sol, right? And now even this candle took out the liquidity here and closed way below, right? And then also now, as I mentioned earlier, the candle that closed within the POI, the low, got taken out here, and this candle eventually also closed below that, right? A more conservative way would have been, of course, again, if price takes out this low like that and then continue higher, right? Because I don't know if you see it, but this candle wick acts as a valid pullback, as in potential internal inducement candle wise, right? Because although it's very minor, it did take out, if you look closely, the high of this gray colored doji candle, right? So candle wise, what we see here is this, right? While this is obviously structure wise, just like you know, it was here, right? Structure wise, boom, liquidation, boom, liquidation, continuation, continuation, right? Those are all structure wise. But what I refer to this now is candle wise. If you put those candles, like if this was a dot, this was a dot, this was a dot, this was a dot, and if you connect all these dots by going from candle to candle, right, you have now definitely, although very minor, a candle-wise pullback, which can act as your internal inducement from this move, right? But again, preferably, we would like to see also that this low is taken out. Then we would have even more confluence to enter from this wick, or even after liquidation here is taken out. So if you are a bit more, you know, aggressive, you can enter here and leave your stop there, right? So let's see what will happen after that. Right, so basically, after I have placed my order here, again, I had to go back to my session with my student, and later I got an alert, and not because this position was triggered, but rather because my TP was hit, right? So at this point, I did mark out that 1 hour loss that I mentioned earlier, right? Which stop loss set here, and TP again here, and my entry was based on the wick here of this black candle, right? So definitely a stop, but nevertheless, this position did not get triggered. That's why I marked it as 2 dashed, orange lines, as in not active or missed. So what I did here is, what I did get in return is 2 times 20R, so 40, and 115, so 55, right? Missed entry here, missed entry here, and let's not forget, obviously, our 1 hour loss. So even though I had 1 hour loss, I still end up with 54 R in profit, right? And yeah, I mean, I'm very grateful for that, AUDCAD. So definitely thank you for that. And yeah, just following my system, every now and then you will definitely get a stop hit, right? But as long as it is a calculated position and you are not entering because of FOMO, right? Because that way you don't have control, in my humble opinion, over your emotions, right? And you are all over the place, right? Because then you see entries here, you miss an entry, you see one here, you get stopped out, you see one here, again, stopped out, and eventually perhaps one position will be triggered. But you have to be logical about your entries. And in this case, like I said, the loss I suffered over here, it was to me strategic, right? I anticipated that it may suffer 1R loss. That's why I immediately looked for a re-entry at this area, right? Because now I kind of got more confirmation, but alas, this price action did not trigger me. But like I mentioned earlier, it is what it is. You can't catch them all, and I was not able to, monitor price action live, and it was a pretty impulsive move to the downside. So even if I was waiting, let's say, okay, I then would have noticed that my liquidity moved from here to here, eventually from here to here, and then from there to there, and then from there to there. And none of the cases, right, price once went and take out liquidity. So to me, it was never, another entry, because I will have to wait until the most recent liquidity was liquidated at some point. Let's say price action did this, and before hitting my TP, let's say it did something like this, I then would rather look for an entry here to scale in, right? And if this one then would fail, something like this, again, these are a bit decisional entries. Why? Because price action has every reason to go higher, because now this here can still act as your extreme unmitigated POI, even your order flow here. Perhaps, let's say POI here is the refined order flow of this one, right? So price still may continue higher, mitigate order flow. If you then get any entry criteria after the mitigation, and by that I mean, again, an actual candle close, and then look candle-wise for your entry criteria, then you can do so. If not, then you still have to wait until either liquidity here within the order flow is, for example, taken out, right? Like that. And then look for your entry criteria, something like this, right? Or because liquidity already is taken out at this point, before price takes out this low, like this, you don't have to wait anymore until this happens, because what you are waiting for already happened here. So at this point, you can definitely, before price closes at this point, if it comes back to mitigate something here, you can definitely, instead of looking for liquidity, look for efficiency, right? Mitigation, and then enter here, and then short there. But at this time, none of that happened. I'm just pointing out what could have been also the case, right? But yeah, so I hope this video of this recap of Australian dollar, Canadian dollar will definitely give you some input into your trading strategies, approaches, perspectives. And, if you like this video, please leave a like, comment, and do share the video with others who may be interested in these, concepts as liquidity sweep methods and or mitigations of high probability POIs. Well, that's it for me, family. Thank you for your time, attention, and I definitely catch you in the next video. Happy trading and stay healthy.